welcome to the CNBC-TV18 Mumbai newsroom. I'm Ekta Batra and you're watching your stocks this afternoon. Well, it's turning out to be a weak day for the markets. We have the mid-caps which are underperforming. So the mid-cap index is now at the low point of the day. It's shed off over 700 odd points. We have the bank nifty which is reeling under pressure as well. So that index has shed close to 500 odd points, down around 1% at this point in time. And we have the nifty which is just about holding at 19,351 levels, down almost 200 odd points for the Nifty. So overall, turning out to be a weak day for us. In terms of a couple of Nifty stocks, what is managing, however, to hold its head above the water includes Adani Enterprises as well as Nestle. So both those stocks are higher by around over 2% respectively. We have Eicher Motors, which is not doing too badly. So that stock is up around 1.5%. And HDFC Bank too, where there has been some amount of management rejig. That stock is up around 1%. So that's what's taking place in the markets at this point in time. We have financials which are weak. And how do you approach specific stocks as well as investments in such a market? To answer all of your queries in the next 30 odd minutes on the show, we have Rajat Bose joining in from rajatkbose.com and Shahina Mukadam, who's an independent market expert, to answer all of your stock queries. Rajat as well as Shahina, welcome to the show. Thanks very much for joining in. Before we get to the queries, Rajat, wanted your view on the markets, considering that the broader markets have fallen more sharply in today's trading session. And what's the next level on the Nifty that you'd watch out for?
Yeah, good afternoon, and thank you for having me. I would say that first to talk about the mid-cap index. Mid-cap index, actually, if you look at it from its bottom, it was about 10,000. From there, this whole upswing is about 300% rise. It from 10,000 some low, it went up to 43,000 kind of levels. So CNX mid-cap is definitely overbought and it is coming down. It can go further down. And what I have seen is that on a long-term basis, when you have, say, 300% rise in a major bull market, it is corrected minimum by 25% to about 50%. That is the kind of corrections that mid-cap index in the past have shown. So chances are that we might have seen a top already. Coming to Nifty, what I would say is that Nifty, if it were to fall till such time, it holds above 19,250 to about 18,950. This range is a major support area. Unless this is taken out, there would be hope for the bulls. Otherwise, because the 9-day exponential moving average is actually going to cut on the downside the 50-day moving average. So that is another bearish signal. So market is likely to remain weak, but still not all is lost. That's what I would say. And regarding the bank nifty, I would say unless 43,680 to about 43,300, this range is taken out. If this range gets taken out, then there would be major problem. Otherwise, even here you can expect a bounce back.
Okay, all right. So that's the view on the markets. But let's get in a couple of questions then. We have Shefali Jain, who writes to us from New Delhi. She holds 20 shares of Vedanta, which she's bought at 65 rupees. She asks if she should be worried about the demerger news surrounding the company and probably what she should do with her holdings, considering that she's in the money on this one. Shahina, take it away on this one. Vedanta, the demerger, obviously minority shareholders are wondering what they should also do. So what would your recommendation be?
Yeah, see, I think, the demerger and the whole thing to be in effect will take 1.5 years at least. And the investor is making money. So I think the stock will keep consolidating at best for some time, till the investors can pick and choose as to which company they want to be in after maybe 1.5 years, 2 years. So I would suggest that she books, she's making money, book your profits and relook at it after, maybe a year or two.
Okay, all right. So relook at it after a while. But Rajat, what would you recommend on Vedanta in terms of the technicals? How would you approach it?
Since, see, if you look at the weekly chart of Vedanta, it actually shows a inverted saucer. But the point here is that around 207 to about 200, the psychological support level, it has shown two bottoms, one very recently and one a couple of years back. So there is likely to be a double bottom, but there are indications that it may weaken further. But the investor can get out right now, as Shahina said, or can wait. If it were to cross 240, then there would be a possibility that it might move up to something like 250, 255, then take an exit. But again, it will come down. So either you exit here or you wait for the bounce.
Okay, all right. So that's the view coming in on Vedanta. Well, we have another query now. Shalu Jain writes to us from Pune. She holds 100 shares of Suson Energy, which she's bought at 100 rupees. She wants to know what to do, whether to hold or to book her losses. So she's obviously bought it when Suson had a different fundamental outlook rather. So Shahina, what would you recommend on that one? This stock is corrected over 77% from its all-time highs. It's recovered from its lows, but nonetheless, do you think that she could probably see those levels of 100 rupees back?
Well, I don't know. I don't think 100 rupees, but even at current levels, what I believe is with some strict stop loss, she can continue holding because there seems to be some institutional demand for the stock. One, two is they are showing some improvement in balance sheet. While of course the net worth is negative still, but there is some improvement. The order book position also is looking okay. So I think with a stop loss, she can continue holding, maybe a 24 rupees or something that Rajat suggests.
Okay, all right. Well, Rajat, what would you recommend?
I fully endorse Shahina's view. 24 should be the stop loss, but to put things into context, from July, mid-July, I think it was 8 rupees something to now 28 kind of levels. So if I were in her shoes, I would have probably booked part profits here and rest, part losses here and rest if it were to fall below 24 then. Because when 24 caves in, maybe she won't get so much of a chance to exit from this because this rise is absolutely vertical.
Okay, all right. In fact, the stock, as you can see, has given returns of 255% just in the past 12 months. Let's get to another question now. This time from the auto space, we have Srinivas, who writes to us from Chennai. He holds 3,000 shares of Ashok Leyland, which he's bought at around 186 rupees. So he's sitting on a loss right now. He wants to know what to do, whether he should hold or sell this particular counter. Well, Rajat, he might be sitting on a loss at this point in time, but the stock has done reasonably well. It's up around 16% on a year-to-date basis, and it's up around 60% in the past 5 years. Do you think that one should probably hold on or book the losses?
Before I answer your query, I must disclose that I have recommended this stock at lower levels to my clients, and the target given was 203 for maximum and 193 to about 203. That kind of levels have come. Maybe they have booked profits, but then the problem here is that this is what Vedanta is showing, an inverted saucer at the bottom. This is showing on the daily chart, inverted saucer at the top. This is actually a distribution pattern, generally happens at the top, and it has happened here. So the major support is around 167 or so. If it were to fall, then it will come down to something like 163, where the 200-day moving average is located. If this is the kind of pattern, then it would be better to actually sell at current levels or sell on rallies, even if you are booking losses.
Okay, all right. Shahina, would you have a view on Ashok Leyland and how would one probably approach it?
Well, I mean, as Rajat has mentioned, the stock has given good returns to the investors, one of which is me also, but holding for a long time. But at current levels, I think because it is expensive, if you look at valuations, it is now close to 11 times EV by EBITDA FY25, 1 year forward. Having said that, as an investor, I would suggest one continues to hold because they are gaining market share. You see them continuously gaining their market share in their HCV segment. Also, if you see margins that we saw in the last quarter were better. And I think with raw material prices going down further, they will be able to sustain better margins on back of better product mix. So as an investor, long-term investor, I would suggest continue to hold. You may see some bit of correction, some bit of consolidation.
Okay, some bit of correction and some bit of consolidation. That's on Ashok Leyland. Let's move on now. We have Shivam who writes to us from Mumbai. He holds 150 shares of Titan, which he's bought at 100 rupees per share. And he's a short-term investor, wants to know what to do and what he should do with his holdings. Well, Rajat, if he stays long enough, maybe he'll be able to buy a house at this rate. But nonetheless, what would you recommend?
Ekta, two things don't jail. Purchasing the stock at 100, that must have been a long-term buy. And he says that he is a short-term investor. If I have to give a view on the basis of his being a short-term investor, then I would say that the level of 3,100 or at the most 3,000 should be used as a stop loss and he should book his profits. Otherwise, if 100 rupee or even 1,000 rupees purchase price, if it had been the case in his shoes, I would have retained it.
Okay. Well, let's just assume that he's a long-term investor and he's bought at lower levels at this point. Maybe there could be an error in terms of the purchase price. But in any case, let's assume those two things now. So, Shahina, from that perspective, what would you recommend?
I would recommend a hold. The market share, the overall market share that Titan has still in the jewelry segment is very small, compared to the overall market. The market is very large. And so the growth is there. The stock has been expensive, always remained expensive. So for a long-term portfolio, I wouldn't be trading in it. But short-term trading, he can look at booking his profits if he wants to.
Okay, all right. So that's the view coming in on Titan. Well, let's just get a quick handle on the markets. There's been a little bit of a recovery which has taken place. So that's probably because the US futures have recovered. As you can see, the Dow futures are up more than 150 points from the lows. Remember that the Dow turned negative for the year in yesterday's trading session. We had the yields which went to the highest levels that we've seen since 2007. We had a complete risk-off that took place on fears that the Fed could be higher for longer. So that probably weighed down in terms of the market sentiment. Let's see how the US markets do perform in today's trading session, because that will probably percolate onto what tomorrow would look like for us. We'll do one thing. We'll take a break. On the other side, we'll answer more queries. Stay tuned. Welcome back. You're still tuned into Your Stocks on CNBC-TV18. We have with us Rajat Bose, who's giving us his technical analysis on a lot of the queries that we have this afternoon, and Shahina Mukadam, who's joining in on the fundamentals. Well, let's get to another question now. We have Ayushi Mehra, who writes to us from Bhopal. She holds 20 shares of HDFC Bank, which she's bought at around 1,000 odd rupees. So she's sitting in the money on this one. She wants to know what to do, whether to remain invested or book her profits and exit at current levels. Shahina, what would you recommend on HDFC Bank? There are fears that there could be a loss in terms of market share on account of the transition, etc. But how would you approach it?
I think whatever little loss there is in terms of market share will be regained over the medium to longer term. You can see the growth is coming back both in deposits as well as advances. Valuation at less than 3 times 1 year forward is making it extremely attractive even in terms of valuation. So I would recommend that it should be part of your long-term portfolio.
Okay, and technically, does it have more to go on the upside, you think, Rajat?
Well, if the investor is a long-term investor, that he or she can continue with it. But there are certain pointers that suggest that immediately the upside will be fairly limited. Where can it go? Up to, say, 1575 to about 1600. This is the range it can go up to in a pullback rally. But since the 200-day has also changed its gradient on the downside, this rally won't sustain and there would be lower lows below 1500. So the choice remains with the investor, whether he or she would get out of it, or if he is a long-term investor, then carry on with it as she or he chooses.
Okay, all right. Well, let's stick with the banks because we have another query from the banking space. Shalini Srivastav writes to us from Mumbai. She holds 50 shares of PNB Bank, which she's bought at around 80 odd rupees. And she wants to know what to do, whether the stock will return to its previous highs. So what would you recommend on this one? It's close to its 52-week high of around 83 odd rupees, but obviously it's a far cry away from those levels of around 266, 277 rupees that we've seen previously in its heydays. So what would you recommend, Shahina, on PNB?
I would recommend that the investor continues to hold because valuations at price to book of point, I would say 8 is not expensive for the size of PNB. It has been one public sector bank that has still to show substantial improvement in asset quality and improvement in NIMs, but I think it is getting there. So I think the investor will not only get his money, but may make some money over it. So it's a hold as of now.
Okay, and Rajat, would you have a recommendation on PNB?
Yes, I actually recommended this stock for the long term to my YouTube viewers. But before that, I must say that 85 to 88 would create one hell of a problem for this stock. It may take quite a bit of time before it decisively crosses 88 and move further up. But once it starts moving further up, I'm fully with China that it can immediately, say over the next 6 months or so, can move up to something like 130 to about 140. This stock should be held in the portfolio. So there is no point as such to get out of this counter at this point.
Okay, all right. So that's on PNB. Let's get in a query now on the phone. We have Mohan Manjare, who is on the line from Thane. He has investments in GNFC or Gujarat Narmada Valley Fertilizers and Chemicals. Mohan, thanks for joining in. If you could take us through your question.
Madam. Good afternoon, madam.
Afternoon.
I bought Gujarat Narmada Fertilizer GNFC shares in the month of June at around 594, and number of shares I bought 1,000 shares. But now, can you give me some advice? I need advice about that.
Okay, how long can you hold it for?
I can hold it for at least 1 more year.
Okay, hold it for 1 more year. Rajat, come in on this one. What would you recommend? 594 is the buy price. 614 is currently where the stock is.
See, I would say that if he is willing to hold it for 1 year, put a stop loss below 545 and carry on with the position, because as it is, the state PSU, central PSU stocks are doing pretty well, and technically also it suggests on the weekly chart that after a consolidation it can move up, and once it takes out 700 levels there would be good momentum in it. So keep a stop loss below 545 on closing price basis and continue to hold it.
Okay, and Shahina, what about you?
See, what I would suggest if the holding period is so short, 1 year, then I would suggest a switch. Reasons being that industrial chemicals are actually on the down cycle. The prices are coming down. For an example, ammonium nitrate, if you see last 6 months, the price is down by more than 50%. So, and when the cycle turns down, it takes at least a couple of quarters for it to again, move up. And if you saw the last quarter numbers, actually had started showing the effect of lower prices. So to that extent, I think a couple of quarters are going to be subdued. Now, having said that, if you look at valuations, despite lower numbers, lower profitability for the full year, I still think the stock will not be expensive. It will still be available at 5 or 6 times EV by EBITDA current year. So, I mean, if you're holding for the longer term, there is no harm. But if you're expecting to see good numbers and a spurt up in price, I don't think that's going to happen over the next couple of quarters.
Okay, all right, Shahina, as well as Rajat, thank you very much for joining in and taking us through all of the queries. That's all the time that we have on the show. But do remember, as always, to email us your queries and we will address them with our experts. Stay tuned. Closing bell up next.